Stop whatever you're doing. March 17th, 2026 was not just another day in the news cycle. It was the day this conflict crossed a threshold most analysts won't name publicly. While media outlets showed you footage of airstrikes, something far more consequential happened. Iran closed the Strait of Hormuz. Not temporarily, closed it. And that single action activated what I call phase 2 of this war. A phase where the battlefield stops being military and becomes economic, where casualties stop being soldiers and start being your savings account, your grocery bill, your retirement fund. This is game theory. And by the end of this video, you will understand exactly what comes next and why almost nobody saw it coming. Let me give you the numbers first, because numbers don't lie. The Strait of Hormuz, 33 kilometers wide, carries 20 million barrels of oil every single day. That's 20% of all oil consumed globally. Japan gets 75% of its energy through that waterway. India 60%, China 40%. When that strait closed on March 2nd, Brent crude jumped from $65 per barrel to over $110 in less than 2 weeks. A 40% surge. Your gas prices climbed from $2.92 to $3.72 per gallon nationally. That's not war over there. That's war in your driveway. But here's what makes Phase 2 different from what came before. Phase 1 was shock and awe. The United States and Israel launched Operation Epic Fury on February 28th. Nearly 900 strikes in 12 hours. Supreme Leader Khamenei was killed. Nuclear facilities hit. Command infrastructure destroyed. Washington called it a decapitation strike. Iran's Air Force was grounded. Their Navy battered. Radar systems offline. President Trump said Iran had no military left. And yet, 17 days later, the Strait of Hormuz remains closed. Iranian drones still striking ships. Oil still above $100 per barrel. 6 major American allies, Australia, Germany, Greece, Italy, Japan, and the United Kingdom, all declined to send warships to reopen the strait. That is not what victory looks like. This is where game theory becomes essential. What you are watching is not a military failure. It's a strategic mismatch. The United States built its military to fight the Cold War. Massive aircraft carriers, stealth bombers, nuclear submarines, systems designed to intimidate the Soviet Union, to win through spectacle. That doctrine worked for 50 years because the Cold War was never really a war. It was a performance. But Iran didn't build a military to match American spectacle. They built a military to survive it. And there's a critical difference. Iran produces a drone called the Shahed 136. Each unit costs between $35,000 and $50,000. They have an estimated stockpile of 80,000 drones and produce roughly 500 new ones daily. The American interceptor missiles used to shoot down these drones cost about $1 million each. A single incoming drone often requires 2 or 3 interceptors. You're spending $2 to $3 million to stop something that cost $50,000. At scale, that's not a battle. That's economic attrition. And attrition is exactly what Iran prepared for since 1979. Look at the geography. Iran is a mountain fortress. The Zagros Mountains run along the entire western border. The Alborz Mountains dominate the north. You cannot occupy what you cannot reach. American airstrikes can destroy Tehran's infrastructure, crater runways, level government buildings. But missile launchers, drone factories, fuel depots, command bunkers all sit underground in tunnels carved into rock over 2 decades. You know what defeats air power? Depth. And Iran has geographic depth Iraq and Afghanistan never had. This brings us to the economic choke point, the real weapon in Phase 2. When the strait closed, it didn't just affect oil. Qatar Energy declared force majeure on March the 2nd after an Iranian drone strike. That pulled 20% of global liquefied natural gas off the market instantly. European natural gas prices doubled within days. Fertilizer jumped 35% because 1/3 of global fertilizer trade moves through the Gulf. This is the part your news isn't explaining clearly enough. When energy becomes scarce, everything becomes expensive. Trucks that deliver food run on diesel. Diesel is heading toward $5 per gallon. Factories need electricity. Electricity costs are spiking across Europe and Asia. Farmers planting spring crops need fertilizer. Fertilizer costs just jumped by 1/3. This is a supply chain event disguised as a military conflict. Goldman Sachs raised U.S. recession odds to 25%. The IMF warned of inflationary risk to the entire global economy. The word they're whispering is stagflation, the 1970s. Gas lines, double-digit inflation, interest rates above 15%, the nightmare where prices rise and the economy slows simultaneously, and there's no clean policy solution. You raise rates to fight inflation, you crush growth. You lower rates to help the economy, you let inflation run. We are looking at the early stages of that trap. Phase 2 has 3 possible branches, and the United States is currently on the path toward the second one. Branch 1 is de-escalation. Both sides step back. Diplomacy restarts. The strait reopens. Probability less than 15%. Neither side has incentive to stop. Iran watched their supreme leader killed on international television. In Shia Islam, that is martyrdom, a religious call to action. The pressure on Iran's leadership to respond is not political, it's theological. Trump needs this war to justify his foreign policy doctrine. A quick retreat would be political suicide. Both players are locked in. Branch 2 is prolonged attrition. The war continues for months, possibly years. The United States maintains air superiority but cannot occupy Iranian territory. Iran keeps the strait closed intermittently, launching drones, hitting merchant ships. Oil stays elevated between $100 and $150 per barrel. Global inflation remains high. The U.S. economy slips into mild recession by late 2026. American casualties remain relatively low because there are no ground troops, but the financial cost compounds every month. $1.5 billion per day burn rate. That's $45 billion per month. $540 billion per year. Probability 60 to 65%. This is the path of least resistance. Neither side wins decisively. Both sides bleed. Branch 3 is catastrophic escalation. Ground troops deployed. The war spreads regionally. Russia and China provide material support to Iran. Nuclear risks enter the equation. Probability 20 to 25% and rising. This is the scenario that keeps me awake at night. Once you're on this path, off-ramps disappear quickly. If American forces get bogged down in Iranian mountain terrain, if casualties mount, if domestic political cost becomes unbearable, the pressure to escalate becomes very real. And in that scenario, we are in territory the world hasn't seen since 1945. Here's what you need to understand about why Phase 2 is more dangerous than Phase 1. Phase 1 was military. Can American air power destroy Iran's nuclear program? Those are tactical questions. Phase 2 is about systems. Can the global economy function with 20% of its oil supply disrupted? Can central banks control inflation while growth slows? Can democracies sustain expensive foreign wars while voters face $5 gas? These are political, economic, and social questions. And history tells us those questions are harder to answer. The Peterson Institute modeled this. If oil averages $140 per barrel for 2 months, U.S. GDP contracts by 1.2%. If the war extends into summer and oil stays above $120, we're looking at technical recession. 2 consecutive quarters of negative growth, that is math. Consumer spending represents 70% of the U.S. economy. When households pay $72 more monthly on gasoline, plus higher food costs, plus rising mortgage rates, discretionary spending collapses, restaurants see fewer customers, retailers see lower sales, corporate earnings fall, stock prices follow. Your 401k is directly exposed. Let me tell you what the people managing billions of dollars are doing right now. Treasury inflation-protected securities are trading at negative real yields out to October 2026. Institutional investors are accepting lower returns for guaranteed inflation protection. They're betting energy shocks keep inflation elevated into next summer. Gold fell 14% since the war began, its biggest weekly drop since 1983. Why? Rising oil prices push central banks to hold rates steady. Gold pays no interest. When Treasury bonds yield 4.25% and savings accounts pay 5%, gold loses relative appeal short term. But JP Morgan has a year-end target of $6,300 per ounce. Bank of America says $6,000. The lesson is that the peak of a crisis often produces short-term disappointment, while patient accumulation over time produces long-term results. Here's the part almost nobody is discussing openly: the petrodollar system. Since the 1970s, global oil trade has been denominated in US dollars. Saudi Arabia, UAE, Kuwait sell oil, receive dollars, invest those dollars back into American financial markets. That recycling mechanism has been a pillar of American economic power for 50 years. But Gulf states now face existential threats. Iranian drones are hitting their infrastructure. Desalination plants producing drinking water for 100 million people are being targeted. If those economies destabilize, if sovereign wealth funds liquidate American assets to fund defense, that capital flow reverses. And when that flow reverses, the stock market doesn't just dip, it reprices. China is watching this carefully. Beijing has been building non-dollar oil trading systems for years. Belt and Road Initiative. digital yuan pilots, direct currency swaps with Saudi Arabia. If this war drags on, if Gulf states lose confidence in American security guarantees, the incentive to shift away from dollar-denominated oil trade accelerates. That is not a 2026 event, but it is a 2027-2028 structural shift this war is accelerating. And if the dollar loses its unique role in global energy markets, American borrowing costs rise, inflation becomes harder to control, and the post-1945 economic order fractures. What does Phase 2 look like over the next 90 days? Oil prices fluctuate between $100 and $130 per barrel. Gas prices stabilize between $3.50 and $4.20 per gallon. Food price increases become visible by late May as higher fertilizer and transportation costs move through the supply chain. The Federal Reserve holds rates steady, unable to cut because inflation runs hot, unable to raise because growth slows. Stock markets remain volatile. Energy stocks outperform while consumer discretionary stocks underperform. Mortgage rates stay above 6%. Consumer sentiment continues falling. Political pressure builds on both sides to find an exit neither side wants. And here's what most people miss about this economic warfare dynamic. Every day the strait stays closed. Iran accumulates strategic advantage even as its own economy suffers. Because the pain is distributed globally, but concentrated differently. Asian economies dependent on Gulf oil are bleeding faster than Iran is. European manufacturers facing tripled energy costs are shutting down production lines. American consumers watching their savings evaporate into higher prices are losing faith in their government's foreign policy. Iran's calculation is simple. We can endure poverty and sanctions because we've been doing it for 45 years. Can the developed world endure $5 gas and food inflation for 45 weeks? That's the bet. And so far the data suggests Iran might be right. This is not fear. Fear happens when you don't understand the map. What I'm giving you is the map. Iran spent 20 years building this strategy. The United States didn't accidentally end up here. This is the logical outcome of doctrines built for a different kind of war. What's happening now is the system being tested in ways it hasn't been tested since the 1970s, and the early results suggest the system is not as resilient as we assumed. Subscribe to this channel because what comes next requires people who understand the difference between news and analysis. News tells you what happened. Analysis tells you why it happened and what happens next. We are 3 weeks into a conflict that could reshape the global economy for the next decade. The decisions being made right now will determine whether your retirement account recovers or contracts, whether inflation stays manageable or spirals, whether this remains a regional war or becomes something larger. The time to understand the map is now. Because Phase 3, if we get there, will not give you time to catch up.